Good day, fellow investors. Today we're going to discuss a new investing framework, spawners, that I really believe should be in each of our investing toolboxes. It is a framework really promoted over the last year by Pabrai, and it discusses paths to finding stocks that will 10x or 100x. We will explain the spawners, the type of spawners, and the investment strategies related to spawning. Spawners are companies that constantly spawn out new ventures that offer unlimited upside if those gain traction, and that unlimited upside is what leads to 10x, 100x investment returns. Examples are, of course, Alphabet, Tencent, Amazon, and these are apex spawners because they use all four types of spawning. So let's dig into spawning. It's really important to understand what it is so that in those few times in your investing life cycle, when you find a spawning opportunity, that you hit hard on it. Because if we just look at the results these spawners have given over the last decade, 2 decades, we are talking 50x returns for Google. We have 100x returns from Amazon over the last, 15 years. And companies like Tencent have returned more than 700x for those that invested early. So by having the spawners investments framework in your toolbox, you will be able to understand these companies from the beginning, and you have years to understand them, but you need to understand the framework to be able to take advantage of the latter upside that eventually comes from all these new investment ideas. If you like this video, if you get value from this video, and I've done my best to give value to you, please smash that like button. The plan for the video: discuss Pabrai's shift from value investing to spawning, explain what a spawner is, how to find them, the 5 different types of spawning stocks, discuss 15 stocks that are spawners. We will add them to my stock market intrinsic value template, so there will be a list. I will ask you to share your potential spawners so that I will be filling that list. You can download it for free. And then we'll also discuss the risks as real value investors. Let's start. Now, Pabrai, friends with Charlie Munger, value investor over the last 2 decades, has recently made a presentation online. This was in December. All the videos that I mentioned will be linked in the description below, and this video too, so you can watch the full 1.5 hour presentation and discussion there that I'll try to summarize here. Pabrai was a value investor that did really well, as we discussed into the Richer, Wiser, Happier book summary. So he did amazingly well from 1999 to 2018, where he turned value investing style 100,000 into 1.8 million. But since 2018, and I think since 2016-17, his Indian funds and other funds didn't do really well, so his performance was really suffering. But he read Nick's Leap, and he's now switching to the spawner investment framework, and his goal is to build a portfolio of apex spawners. Because when you think about investing, you have the normal value investing option, which is investing in discounted pies, buying $1 for 50 cents, but you have to constantly look for them. It's very tax inefficient, and it's difficult to get more than 2x, 3x, 5x returns. And when it comes to Pabrai, one of his big losses was Horsehead Holdings, the zinc company that he lost a lot of money on, GrafTech also. So it's a difficult, ugly game, and therefore he logically looks for something better. As we have seen, best performing stocks were spawners over the last decade and 2. So he's looking for growing pies, tax efficient, you find them, you buy, you hold them, companies invest into new businesses tax efficiently, set it and forget it mindset, and those offer 10x to 100x investment possibilities when you find the real ones. There are, of course, many other 10x to 100x investing strategies. We have discussed those in the two books that we did on 100 baggers and 100 to 1 in the stock market. Links to videos all below. And you can invest in focused mousetraps, narrow focus with long runways, Costco, Chipotle, McDonald's, great capital allocators like Berkshire, Uber cannibals that do extreme buybacks, think of Apple, deeply undervalued players, risky, highly leveraged players, or you can invest in spawners, which are companies that continuously spawn related and unrelated businesses. So, what is a spawner? Spawning is defined as releasing or depositing eggs, producing offspring for a person, and to produce young, especially in large numbers. When a company does this, you never know what fish will grow big, but if you can find and nail the right one, because all businesses, unlike these fish, are different, then you might have an investing spawner that will give 50 times returns for your portfolio or even more. Just an example here with Google solving that, and they have Calico, their health adventure, to learn more about aging and extending the human lifespan. And these are the kind of investment ideas that are there. Nobody from the investing world considers them because those are just spending money, but you never know what kind of idea they will find and how valuable it will be. If Google does this, then it will triple, 10x the market cap, which is something remarkable. But that is what spawning is about. And even better if you can find smaller spawners like Google was 10-15 years ago. If we look more in detail into spawners, they need to have the correct DNA, so they need to be able to constantly add new businesses all the time, investing and, let's say, increasing their business strength with the new businesses. You have to also expect many failures, and Wall Street hates that uncertainty. And as we said, spawners are tax efficient for the company because they invest pre-tax earnings, so that's like having a free loan from the government. And if you are an investor, then there are no capital gains for you. To really touch on failures here, a spawning idea Amazon had was the Fire phone, which was a total flop. And from January 2014 to 2015, when Amazon didn't manage to gain traction with the phone, the stock went down 22%. This is how much Wall Street hates failure and uncertainty. Of course, since then, 6 years, Amazon has been a 10-bagger because it just keeps doing this, keeps testing, keeps experimenting, and keeps building its ecosystem. This is spawning. And when it comes to spawner, there are actually 4 types of spawners and apex spawners that combine all the 4 types. And apex spawners is actually what we are really looking for. So we have adjacent spawners, so you can pause this slide if you want to read a little bit more. Expanding with related businesses, embryonic spawners, acquiring small businesses and growing them into the ecosystem, cloner spawners, just copying what works, non-adjacent spawners, so buying new businesses. If we combine it all, then we have apex spawners. To give you an impression of what spawners are, so Starbucks from constantly new ideas, Tiavana or this or that, food, alcohol, embryonic spawners, Facebook, buying Instagram for $1 billion, buying WhatsApp for $19 billion, buying Oculus, cloner spawners, so we have Microsoft. What works, they copy it and produce it. And BYD Auto 10 years ago entered the automotive business and now is really benefiting from it and batteries, even if it wasn't originally an automotive company. Then we have apex spawners that combine all the 4 above categories. Amazon, from Amazon.com marketplace, music, buying new companies from Audible, cloning Amazon Pay, Amazon Tablet, Amazon Fire Tablet, going into cloud web services, Amazon Fresh Delivery. So a lot of ideas there, investments, but if they can just scale one of these investments onto the ecosystem, all the failures will be covered. As they did simply write off 170 million for this flop, but consider the risk and reward. 170 million invested in this, but imagine this had worked and they would now be competing with Apple for 5–10% of the market share. The 170 million invested might be worth $1 trillion. If Apple is 2 trillion, let's say 500 billion. So you see now the risk and reward. Small investments into those small fishes that have unlimited upside, and if it fails, you just lost 170 million, which is peanuts for Jeff Bezos. Another company that we discussed here on the channel, made an analysis, is Baidu, another Apex spawner, just acquired Joy, so doing cloud, doing automotive businesses, robotaxis, on the core Baidu search business. So when it comes to types of spawners, if you look at Apex spawners, it is always about diversification, but diversification with small investments, those little fishes that can grow into big fishes. Similarly, if we look at Tencent, it started as a social network, gaming company, and now online advertising is growing more and more, but also others revenues are growing faster and faster, and the company is expanding its metaverse, making more and more things profitable, which allows for more and more investments. Tencent, for example, also owns 5% of Tesla, so that's also a way to spawn and grow, even just acquiring small stakes into companies. And then when it comes to spawner investing strategy, you have to also think about diversification in your portfolio, because you never know which spawner will do great. So this spawning strategy has to accept failure as a given. Of 10 spawners, 3 will fail, will be fake, will not end up as spawners, but those that do good, the 2–3 that are real ones with 100x returns, will really deliver amazing investment returns for your portfolio. For investing in spawners, you must really know the DNA of the business. Is it a real spawner? Does it have 10 to 15 years of spawning execution, so that you can understand that it really has a DNA of keep growing and adding value. When you find such a business, you set it and forget it. Winners will cover for the duds. You have to ignore temporary headwinds. Those are normal. Just remember Amazon Fire and the 20% decline there. And when it comes to investing in spawners strategy, you have to sell only when a secular decline is absolutely clear, even if 50% down. What does this mean? So let's say you invested in Amazon 5 years ago, and let's say that from now the company, which is still unlikely, but from now the company stops growing and the stock crashes 30–40%. But you feel that there is more competition, it's not a spawner anymore like it has been over the last 20 years. It will likely be for another 20 years, but I'm saying this just as an example. Despite selling after a crash and after you are sure it has lost that secular trend, you still have made an extreme gain. So don't rush into selling on temporary headwinds, but when you sell, make sure that it's really over. Another example of spawning is Restaurant Brands International, but these guys make acquisitions and then try to grow through acquisitions. If they make more acquisitions and those acquisitions are profitable, then you might see really good returns. The market cap is also much smaller than the other examples. Another spawning company is Pinduoduo, a Chinese company that recently disrupted completely the group buying system in China, and now it's ready to disrupt agriculture it's ready to disrupt logistics and distribution by delivering directly to the consumer without all the intermediaries. And if they can do that and they can keep spawning into new businesses, then that will also be a very successful spawner in the future. Alibaba is also a spawner, and there is a video that just came out, also I'll put a link in the description below, from the Wall Street Journal, how Alibaba is spawning into global fast delivery in less than 72 hours. Watch the video, you'll understand more about spawning. So if spawners are such great investments, we should build a database of spawners, start with that, and then see when and how, what's the risk reward, and if we find one great spawner for our portfolio over 5 years, we are practically set for life when it comes to investing. And therefore I'm adding a little bit the effort here, focusing on spawners, following spawners and their development over time, and adding spawning to my toolbox, but also adding spawners to my investment database. If you go in the link in the description below, you can download my list of publicly analyzed stocks, and I have added a sheet next to the comparative table of investing in spawners. So I have just started with about 14 of them. Some have the analysis, we'll work on that over time, but I'm asking you to send me an email if you have a real spawner that we can add here, especially if those are smaller. So I will be building on this. You can always come back every few months to download the new intrinsic value table with the additional spawners. So if you have a spawner, please send me at least 10 years of spawning, let's say, data that confirms that is a spawner. Then I might look into it deeper and then add it on the list behind me, so that we create value here as a community. I will try to read all the emails. I get a dozen suggestions a day, so why not make it more interesting, and I read them all and really focus on spawners, because it's difficult to find. A few a year would be remarkable, so we need to put our research power together to find the real ideas. Because when it comes to spawning, there are also plenty of risks. We have to avoid fake spawners. You can pause this and read this. You can also read the whole research report on my free stock market investing course. The link will be in the description below, so feel free to check that for more educational videos like this. Do not expect miracles from spawners with valuation in trillions. Hard for Amazon to 10x from the current level. It might take a lot of time for new ventures to gain traction. Baidu's automotive robotics and robotaxis might not get traction in the next 2-3 years, but perhaps in 10 years. There are very few real spawners. Finding one per year is great. You have to accept negative news as a given, but hold on the businesses if it keeps its spawning DNA. Keep in mind, failures will be many. Capital allocation questions will always surround spawners. And Stanley Druckenmiller in a recent interview said how Google's search engine is one of the best businesses out there, but he doesn't understand why are they throwing their money at everything out there. Which means that there will always be a lot of discussions on investing, but that is what makes investing enjoyable, and if you think about it, also creates great investing opportunities if you are willing to have the right investing tool skills, like spawning is and should be part of each of our toolbox, and if you're willing to have an open mind and search for such investments, because what you focus on in life, you get. That's my firm belief. Thanks for watching. Check all the links in the description below. I'm looking forward to your spawners, and I'll see you in the next video. And smash that like button if you haven't.